Welcome back, my friends. Is Stellantis on the brink of bankruptcy? The news today is that Stellantis and Aston Martin shares dropped sharply after profit warnings amid China woes. The French-Italian conglomerate, known for brands such as Chrysler, Dodge, Jeep, and Maserati, warned of lower than expected sales across most regions in the second half of the year. Stellantis now pencils in an adjusted operating income (AOI) margin between 5.5% to 7.0% for the full year 2024 period, down from a double-digit outlook. Aston Martin, whose iconic models gained notoriety via appearances in the James Bond movie franchise, also flagged cuts in its profit margin and production target for the year. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And, please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Stocks of European carmakers hemorrhaged on Monday as Stellantis and British luxury brand Aston Martin issued profit warnings, citing broader industry challenges and difficulties in the world's largest auto market, China. Stellantis on Monday trimmed its 2024 annual guidance on the back of deteriorating global industry dynamics and bolstered competition from China, sending Milan-listed shares lower on open. The French-Italian conglomerate, known for brands such as Chrysler, Dodge, Jeep, and Maserati, warned of lower than expected sales across most regions in the second half of the year. It now pencils in an adjusted operating income (AOI) margin between 5.5% to 7.0% for the full year 2024 period, down from a double-digit outlook. Deterioration in the global industry backdrop reflects a lower 2024 market forecast than at the beginning of the period, while competitive dynamics have intensified due to both rising industry supply, as well as increased Chinese competition, the automaker said. It also lowered projections for its industrial free cash flow to a range between -€5 billion ($5.58 billion) to -€10 billion, from a positive guidance previously, as a result of a lower anticipated AOI margin and temporarily higher working capital over the second half of this year. The automaker further attributed the revisions to its guidance to decisions to significantly enlarge remediation actions on North American performance issues, but supplied no additional details. Earlier this year, Stellantis was sued by shareholders in the US who claimed the automaker defrauded them by concealing rising inventories and other items, Reuters reported. This month, Stellantis US dealer network criticized CEO Carlos Tavares for the company's recent sales decreases, factory production cuts, among other decisions that they assessed as detrimental to the automaker's business. The carmaker's stock closed 14.7% lower on Monday. Economist, Volkswagen's plants in China has it competing with itself. British luxury carmaker Aston Martin, whose iconic models gained notoriety via appearances in the James Bond movie franchise, also flagged cuts in its profit margin and production target for the year. It announced a roughly 1,000-unit reduction in response to disruption in its supply chain and continued macroeconomic weakness in China, anticipating that its earnings before interest, taxes, depreciation and amortization (EBITDA) for 2024 will now come in below the previous year's performance. The company said it no longer expects to achieve positive free cash flow in the second half of this year, and noted that its full-year gross margin is anticipated to come in below 40%, compared with a previous target of around that threshold. Aston Martin said it is addressing the supply chain challenges and continues to recognize the significant market opportunity that China represents as its macroeconomic environment improves. The company's shares closed 24.5% lower on Monday, its worst one-day fall since March 2020 according to LSEG data. The Stellantis and Aston Martin profit warnings come days after German automaker Volkswagen once more slashed its own annual outlook on Friday, now guiding for an operating return on sales of 5.6% in 2024, from a 6.5 to 7.0% range previously. In a Google-translated Bourse filing, it attributed its lowered projections to lagging developments in its passenger car and commercial vehicle brands, along with the deterioration of the macroeconomic environment, giving rise to further risks, particularly for the core brand group. European carmakers have been struggling to retain their footing in China, whose own automakers are now targeting an expansion of their electric vehicle sales in Europe. The broader shift to EVs is increasingly putting European carmakers under pressure while total new car sales fail to return to pre-pandemic levels in their home markets, ING analysts warned at the start of this month. Volkswagen shares were down around 2% as markets closed in London. Well, Stellantis is not going bankrupt, but it is facing significant financial challenges. The company recently cut its 2024 profit outlook and warned of negative cash flow between €5 billion and €10 billion due to weakening global demand and increased competition from Chinese automakers. This has led to a sharp decline in its stock price and concerns about its financial health. Additionally, Stellantis Jeep joint venture in China has filed for bankruptcy, adding to the company's difficulties. However, these issues do not indicate an imminent bankruptcy for Stellantis as a whole. Stellantis has started the search for a new CEO to succeed Carlos Tavares. This move is part of their regular succession planning, as Tavares' contract is set to expire in early 2026. Despite recent financial struggles and criticism from U.S. dealers and the United Auto Workers Union, the search for a new CEO is not directly related to these issues. Stellantis is looking for a CEO to succeed Carlos Tavares, but the company says it's just part of a normal leadership succession plan. Tavares has been under fire from U.S. dealers and the United Auto Workers Union after a dismal first-half financial performance when the company was caught off guard with too much high-priced inventory on dealer lots. As head of PSA Peugeot, Tavares took control of the Netherlands-based company in January of 2021 when it merged with Fiat Chrysler Automobiles. Its North American operations had been the company's main source of profits, but have struggled this year amid larger market changes. In a statement Monday, Stellantis said Tavares' 5-year contract is a little over a year from its expiration date in 2026. It is normal for a board to look into the subject with the necessary anticipation given the importance of the position, without this having an impact on future discussions, the statement said. The new CEO of Stellantis will face several significant challenges. Stellantis has recently cut its profit outlook and warned of negative cash flow due to weakening global demand and increased competition. Managing these financial pressures while steering the company towards profitability will be crucial. With ambitious goals to achieve 100% battery electric vehicle (BEV) sales in Europe and 50% in the US by 2030, the new CEO will need to accelerate the company's electrification efforts. This includes managing substantial investments in new technologies and infrastructure. Stellantis faces intense competition from Chinese automakers, particularly in the electric vehicle market. The new CEO will need to navigate trade barriers and adopt strategies to compete effectively on a global scale. Improving the efficiency of Stellantis operations, especially in the US, where there have been issues with inventory management and marketing strategies, will be a key focus. Revitalizing struggling brands like Jeep, which has seen significant sales declines, and ensuring the success of all 14 iconic brands under Stellantis will be a major challenge. Addressing concerns from unions, such as the United Auto Workers, and maintaining positive labor relations will be essential for smooth operations. These challenges will require a leader with a strong vision, strategic acumen, and the ability to drive innovation while managing complex global operations. The search for a new CEO at Stellantis is still in its early stages, so specific candidates have not been publicly named yet. However, the process is being led by Chairman John Elkann as part of the company's regular succession planning. Given the company's current challenges, potential candidates are likely to have strong backgrounds in automotive industry leadership, experience with large-scale restructuring, and a focus on innovation and sustainability. Internal candidates from Stellantis' existing leadership team, as well as external candidates with proven track records in turning around struggling companies, could be considered. Stellantis has been actively pursuing several strategic initiatives under its Dare Forward 2030 plan, which aims to transform the company into a leader in sustainable mobility and innovation. Here are some key highlights. Electrification. Stellantis plans to have 100% of its sales in Europe and 50% in the USB battery electric vehicles, BEVs, by 2030. They aim to introduce 75 BEV models and sell 5 million electric vehicles annually by the end of the decade. Carbon neutrality. The company is committed to achieving carbon net zero emissions by 203,823. This includes slashing carbon emissions by half by 2030 as an intermediate goal. Financial goals. Stellantis aims to double its net revenues by 2030 compared to 2021 levels while maintaining double-digit adjusted operating income margins. Technological innovation. The company is investing over €30 billion through 2025 in electrification and software strategies for. This includes developing advanced technologies to offer innovative, clean, safe, and affordable mobility solutions. Strategic partnerships. Stellantis is building an innovative ecosystem through strategic partnerships to support its 14 iconic brands and 2 mobility brands. These initiatives reflect Stellantis' commitment to leading the automotive industry towards a more sustainable and technologically advanced future. Would you like to dive deeper into any specific area or discuss how these initiatives might impact the market? But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And, before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school. As well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So, be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.